Ladies and gentlemen, welcome to What Are Your Thoughts on the Compound YouTube channel and the Compound and Friends podcast, the most bussin' show on Wall Street. Everybody's watching. Everybody's talking about it. You guys have really delivered some huge audience numbers for us over the last few weeks right here on What Are Your Thoughts. Michael and I so appreciate the people that come live, the people that come later, the people who listen and don't watch. We appreciate all of you. So thank you so much. I want to start by saying hello to a few of the fans. Let's see who's here. Sean, Roger, Wilson's here. Cliff is here. Drew Hickman, Georgie D. Let's see. Benjamin's here. Jeff. Everyone's here tonight. Really important. Nicole is in the chat. You all say hello to Nicole. Tearing it up all day for the channel. Magnus, we see you.
I'm getting in there.
All right. Get in there. Who else do you see? Do you know how? Just click comments next to private chat.
Sharks. Shark emojis from Sean Graylish.
Yeah. Here, Jay Luther says, I love Batnick, mostly for one secret reason. I'm a crier as well, Mikey.
Love you. Thank you.
The chat likes you. The chat, I just want you to know, they like you.
Oh, when you say it like that.
No, you got the Bat Cave. Like, there are Michael people. All right, who's sponsoring the show tonight?
There are dozens of them.
But they're there. It doesn't matter. What matters is they show up and they self-identify.
Okay. The sponsor for tonight's show is Public. My Cash is working hard. Overtime. Savers not being punished, being rewarded. By this strong economy, by the Federal Reserve. They've got our back. 5% on cash. 5.1 actually. 5.1, yeah. 5.1. Higher than Wealthfront, higher than Betterment, Capital One, Robinhood, SoFi, you name it.
I'll tell you what else is really cool about the Public app. No fees. You don't have to subscribe. You don't have to decide today how much money you want going to the bank every month forever. You can just do it once.
And best of all, kids, it is liquid.
It's liquid. No minimum balance requirement. No maximum. You could put as much in as you want. I love the Public app. I use it all the time. This is a paid endorsement for Public Investing. 5.1% APY as of March 26th, 2024, and is, of course, subject to change. Full disclosures and terms and conditions can be found in the podcast description. All right, let's get the show on the road. Is the S&P 500 heading to 6,000, Michael, by year end? You'd say yes? Where are we right now?
54. It's only 9% higher.
Does it bother you that everyone is now on that side of the boat? Not 6,000, but higher rather than lower. You okay with it?
Meaning like the bears are capitulating, everybody's bullish. I don't love it.
It doesn't bother me.
Okay.
It doesn't bother me. We could go a long stretch of time where most people are bullish. Like, if you tell me like everyone's so bullish, but they just seem to be a little bit bullish.
Yeah. Why wouldn't you be bullish? What is... Yeah. People might not like to hear this, but I'll ask, what's the bear case?
Valuation.
Okay.
And weakening economy. It's actually a substantial bear case.
Oh, the weakening economy. That's legit.
All right. So the Citi Economic Surprise Index is plunging, which doesn't mean the end of the world, but the surprises are all to the downside, including one that we got today, which we'll talk about in a minute. And stocks are now 21 times earnings versus 16 times earnings, a couple of years ago. And the concentration in the market is really made it so that the Dow is almost like basically flat on the year. The S&P's performance is coming from NASDAQ stocks dragging it up. So that's the bear case. And we've learned not to go over the top, focusing on internals and breadth. But I also don't think that you can just ignore them forever. So if you're bullish, you really do want to see the internals bottom and start to head up the other way and confirm. It doesn't have to happen, but I'm just saying like that would make me feel better about 21 times earnings with a slowing economy. I don't know. What about you?
No, listen, I would prefer to see broader participation, but you're stepping on my title. Stay with yours. My topic. Okay. My topic's next.
All right, fair. I want to share this. Evercore ISI has a strategist who had the lowest target on Wall Street until Monday morning when he woke up. This is Julian Emanuel, who I don't know, the firm's chief equity and quantitative strategist, raised his year-end forecast on the S&P 500 to 6,000. He went from the lowest target to the highest target of the major equity strategists tracked by Bloomberg. He is 10% above the market's closing level on Friday. That is an about face from one of Wall. This is Jess Menton wrote this. One of Wall Street's most prominent bears, who previously expected the gauge to finish the year at 4750. Emmanuel's new estimate tops the 5600 level. Goldman Sachs' David Kostin is at. UBS's Jonathan Golub. BMO's Brian Belsky. If you're more bullish than Belsky, and the
Just
week
give
prior,
it a week. Just give it a week. Belsky's coming over the top.
and the week prior you were the low man. It's a weird move to go from lowest target to highest, but maybe I'm wrong. Maybe that's what you actually have to do in order to flip. Like, can you flip to neutral?
Listen, it's not that drastic. It's 10% higher. It's not like he's calling for a monster move from here. I would say, weren't a lot of strategists weirdly neutral coming into the year? It was like an odd number of 0 to 5% estimated gains, which almost never happens.
Yeah, because it was not easy to foresee the legs that this AI earnings growth story would have and what that would mean to the overall S&P, because you're not getting earnings growth like this everywhere. Like, you're getting decent earnings. It's not horrible, but it's definitely not every company looks like the semi sector. So you want to hear the bull case? Emmanuel raised his estimate for the index's per share earnings in 24 and 25 to 238 and 251. The new levels imply an 8% and 5% profit growth. So to your point, pretty reasonable. The S&P's jumped to 6,000 by late December on earnings of $238 per share. Will push the gauge's price to earnings multiple to 25.
Pretty high.
On a trailing basis. Elevated by historical standards, but still short of the 28 level during the dot-com peak. He sees the possibility of the S&P 500 reaching 7,000 by the end of 2025. Oh, this is what I wanted to ask you. So this is one of these weird things now that people have to get used to. The distance between S&P 3,000 and S&P 4,000 is 25%. The distance from 6,000 to 7,000 is like half of that. People are going to have to get accustomed to these milestones hitting faster, like with what we saw with the Dow, where it was like, oh, it's 30,000. Oh, wait, it's 40,000. Like, that's a new thing now that people are going to have to get accustomed to. Saying 6,000 this year, 7,000 next year, yes, it's lofty, but it's also not insane.
It's 17%.
Right, but it's not like the most insane thing in the world.
No,
it's definitely lofty, but this is like a new thing now.
You think if you were to ask strategists or just a casual investor, the biggest risk to the market, it's that the AI story peters out, or it's not. It doesn't deliver on what people are expecting it to be.
That's what I think. That's what I think it is. Yeah. And guess who has the lowest target on the street of all the major Wall Street firms?
Tom Lee.
Great guess. No. Take a guess, seriously. Big bank.
SocGen.
No.
UBS.
I'd be very surprised. JP Morgan.
Oh, yeah? Okay.
JP Morgan has the lowest year-end target for the S&P 500 at 4,200. Is this Dubrovko?
I thought it was, is it Marco?
Marko Kolanovic, yeah. 4,200, implying a drop of more than 20% from Friday's closing level. So to recap,
interesting.
The most bearish strategist on Wall Street just flipped, is now the most bullish, more bullish than Belsky. And the largest bank has a strategist calling for a bear market. And welcome to the show. This is what it. Sometimes this is how the show goes.
Yeah. Do you remember a year ago when Barron's had on the cover, "This market has legs"? And
you didn't ask me if I think we could hit 6,000. Are you
Do
curious?
you think we can hit 6,000?
No.
What do you mean? You don't think we can, or you don't think we will?
This year? No, I don't think we will.
It's 10%.
No, I know we can. I know we can. Yeah, I don't think we're gonna get it.
We're up 15% in the first half.
Yeah, that's a lot.
Yeah.
I think it's great. You close the market right now.
Oh, I love that. Yeah.
Nobody would look back and say, "Shit, I wish there was another 6 months."
Yeah.
So we can go for another 15%. I don't think we're getting another 15% this year.
See, you're not a bettor, so I can't even play the game with you. Like, would plus 250 entice you? $100 to win 250? Like,
yeah, no, I would have to put $100 on my bet to win $250.
yeah, would you take that? Are those odds juicy enough for you?
Yeah, I already lost the bet to you though. I owe you $50.
For what? I remember we made a bet.
I thought Morgan Stanley would kick Roaring Kitty off of V-Trade, and they didn't do it. So I'm already negative 50.
All right.
Do I want to go further into the hole with you?
No.
No, I don't.
Okay. So, do you remember a year ago this cover on? Oh my God, Logan is screaming.
What's going
He was
on? Is that a hostile work situation for you?
No, well, no, it's not hostile. I feel bad. He's on the couch, and I guess he woke up from a nap, and he's not happy. That's okay. I've been unhappy before. It happens.
So do you not have cheddar goldfish in your house? I don't understand.
Oh, we have cheddar goldfish. All right,
You just fucking take a fistful of cheddar
I
goldfish
can.
and put it in his face.
We're potting. All right,
Take 5 minutes and feed him,
no,
and then
he's
come back.
Fine. He's fine. A year ago, we were discussing the cover of Barron's. This market has legs. And I went back and I saw what we were speaking about.
Dude, I want cheddar goldfish right now. Okay, go ahead.
And I think we're pretty reasonably dismissive of market covers as indicators. I've said this a million times. If you're on like the cover of if the stock market's on the cover of Sports Illustrated, yeah, sell everything. But it's Barron's. Yeah. What do you expect them to do?
Well, it's either they have two players. They don't have the whole NBA or the whole NFL. They have a bull and a bear.
Right. And hilariously enough, on that show when we spoke about it, Nvidia had just crossed $1 trillion. How adorable!
Yeah. Oh my God. So this is 1 year ago. Nvidia's crossing $1 trillion. This is the cover. I'm not active on Twitter. Were people mocking it?
The cover.
Yeah, the bull is back. Where people
you like to point out so frequently that you're not on Twitter that it leads me to believe that you actually.
I did it. I made
a tweet. Very much are on Twitter.
No, I actually made a tweet today.
Oh, I made a tweet. Yeah,
for future.
Chat to future proof. What's the news?
We broke 2,000 registrations.
It's amazing.
This is gonna be a year ago. This time last year for future proof year 2, we were at 720.
Monster.
We're through 2,000, and I think 1,400 plus are financial advisors. So it's
best conference ever. Okay, so a couple of things are true. The market's at an all-time high. The Nasdaq had its 7th straight close at an all-time high. Breadth is narrowing. The mega caps are leading. But the other part is that stocks aren't falling off. It's not like the rest of the market is falling off a cliff. 2/3 of all stocks in the S&P 500 are above their 200-day moving average, 68%. Right? So not great, but it's not as if the rest of the market is. This is not the 2,000 top yet.
So
okay.
So 2/3 of stocks are like in an uptrend. They're not at all-time highs, like confirming the market's all-time high, but they're also not getting crushed.
Right.
That's important. That's an important distinction.
John, can we start with the bespoke chart showing that they said you never guessed the market made 4 new all-time highs? I'm sorry, this is out of order, but I think this is a good place to start. If we can't, we'll just go through them in order. Oh, there we go. Perfect. Okay. So Bespoke tweeted this, and this is the percentage of stocks above their 50-day moving average for all of the sectors in the S&P.
Oh,
okay. And just like eyeball them. So you've got energy, horrendous, financials not great, healthcare mid, materials bad. Really, the only place where you've got like a roaring bull market is the bottom left. It's technology, which is good enough. And look at the overall S&P on the bottom right. So if you just saw the snapshot and you said where's the index, I don't know. I guess
you wouldn't guess. You wouldn't guess it's up 11% or whatever.
You wouldn't guess it's at an all-time high. At a bare minimum, you say that in a 10% drawdown, right? So breadth isn't great. Sherwood has a really clever chart. I've never seen it this way. They showed the S&P 500 cumulative advanced decline line over a 4-week period, and then they plot that with the 4-week change in the S&P 500. So the dot on the top left shows where we are today. This is uncharted territory. Now, The S&P 500, it's only up like 3% over the last 4 weeks, but it's doing so with very few stocks going up over the same period of time.
Yeah, because the stocks that are going up are so big, and their earnings growth is just powering. Like it's very weird, and I know that there's a lot of research showing that concentration isn't really like the end of the world, and most bull markets feature some version of concentration. I know Barry linked to something recently, and so did Sam Rowe, about like industry dominance of the market in any given decade. It's always going to be something. I guess maybe this is just the most extreme version ever.
It's extreme. It's extreme.
And it's
weird.
It's been going on for the longest period of time.
It's weird because not simultaneously to these mega cap leading the charge, you also have a spike in percentage of members in the Russell 3000 making a 12-week low. Now, of course, this includes a lot of shitty mid and small cap companies, but nevertheless, it is stark. And if the market does start to roll over, actually, like if the equal weight actually starts to roll, then I'll say, okay, I'm concerned. But it just hasn't happened yet. So I think what's more likely is what has happened every single time almost over the last 15 years that we've seen a divergence, is that the rest of the market catches up. And listen, has the bull market not earned the benefit of the doubt? And maybe this is the time where the rest of the market catches down. But until that happens, you got to give the bulls the benefit of the doubt, I think.
Well, a great segue then is to say, well, what would make the rest of the market catch up? And if I can think of one thing, it's the first rate cut. And just the market processing this message that we actually had a soft landing, mission accomplished, and now they're not accommodating with monetary policy, but they're loosening up on how tight it's been. So, like, if you ask me, look, what is the thing that can make the S&P 490 catch the S&P 10? Like, that's a pretty good candidate, right?
Totes.
That's as good of a candidate as I can come up with. And my opinion right now is that we might be on the verge of it starting, and it might be starting in July. And I'm going to walk you through my reasoning why.
Before you do that, would you allow me to just look at the chat for a second, just see what's going on? Just peruse?
Yeah, please.
All right. There's activity. All right, go ahead.
What a dick. They really love you. All right. The next FOMC is July 31st. Prior to that, on July 3rd, we're going to get the June meeting minutes. And then you get a whole month's worth of data, including, non-farm payrolls. You'll get another CPI. You'll get another PPI. You get all kinds of shit. And right now, walk us through the target rate probability chart.
These are your charts.
It's not my chart. This is
Don't foist. All right, fine. You want me to do it? You want me to do it? I'll do it. I'll do it.
Go ahead.
I'll do it.
Walk us through.
Okay. So right now, this is showing, okay, July. So they're not going anywhere in July. There's a 92% implied probability that they're going to stay exactly where they are. And this really hasn't budged a whole lot. I guess it's up from the last month. A month ago, there was a 70% likelihood that they weren't going to move.
It's creeping.
No. That they're not going to move. That they're not going to move.
Yeah, no,
so,
I know.
Yeah. All right, next one. When's the next meeting? September. Okay.
Right.
So
let's not skip ahead. So there's no meeting in August because they do Jackson Hole, which is central bankers around the world get together in Wyoming, and they fly fish, and they have a symposium where different people give speeches, and sometimes the speeches are really momentous. And sometimes a policymaker, including the Fed or BOJ or somebody from Europe, will get up there and use that stage to announce a pivot or break some ground on some new thinking from within their respective organization. And we saw that with the rise of interest rates a couple of years ago. Like Jackson Hole turned out to have been pretty momentous. Anyway, they sometimes will use that moment to give a speech that resets expectations.
Europe is cutting. Canada is cutting. If we get another flat CPI next month.
So I'm saying I think July is going to be the first cut. It's ceremonial. It's just 25 basis points. It doesn't actually do anything. It doesn't change anything.
Oh wait,
But
you're very much out of consensus because nobody
I
thinks.
know.
Oh, okay.
I'm making a surprise thing. So I want to walk you through this. I think they go in July. They use the Jackson Hole meeting to remind people it's data dependent, and just because they cut once doesn't mean now they're cutting every meeting. No meeting in August. September is probably their last chance, if they don't do July, to get one in before it's too political. Pull up the chart, September rate cut odds. So this is where the market's at.
Right.
So the market believes that there's a 33% chance, a 61% chance that September is going to be the first cut.
Correct.
So I'm a little bit out of consensus. I think they're going to start early, but we'll see. There's no FOMC chart off. There's no FOMC in October, importantly. So the next opportunity, if they don't do July and they don't do September, is November 6th and 7th, a day before the election. I feel like you can't do it for some reason. I think enough people believe that you can't do it that you just can't do it. How would that be interpreted by Trump?
They're not. Yeah, no, I agree with you. They're not going in July. This Fed does not surprise the markets. They just don't.
So they go September, December, 2 cuts.
Yeah.
Okay. December, the last meeting of the year is December 17th or 18th, and I do agree with you. Let's pull the chart up for that probability. So this is kind of all over the map. 45%. It looks like 45% chance of no cut.
No. How about this? There's a 5% chance that we're still where we are in December.
Right.
That right? And so it seems
that 525 to 550.
There's a 95% implied probability that something will be done by then.
Yeah.
And I think that's makes sense.
Now you could do an intra meeting cut, but not without scaring the shit out of everyone. So that's a very low probability, but it has happened. It is possible. I just don't think so.
I thought the language of the last, and we spoke about this with Alicia. I just thought the language is weird. He's acting like they still have a lot of work to do. And it's like, dude, we see the data. It's.
I think he has to say that because people are still so angry about inflation.
I think he had to say that previously, but we're not on the 1 yard line anymore. Like, we're in the end zone. We did it.
All right. Neil Dutta says it's time to cut now. Maybe this is why I think July is possible, because maybe I'm ODing on Neil Dutta, but I really liked his take on this, and he's just been so good for so long. Neil Dutta said, a week or two ago, I noted that an accident was brewing. In the most likely scenarios, bonds would work. Either growth and inflation slows or growth is steady while inflation slows, hence bonds over stocks. Thursday's market action, he's talking about last Thursday, was not especially encouraging. Rates are down, and yet home building stocks are underperforming. Industrials are lagging. There's a fine line between soft landing nirvana and the Fed overstaying its welcome. The Fed just unveiled hawkish dot plots while Powell was relatively skittish yesterday. As the summer progresses, the Fed dots will look increasingly offsides relative to the incoming inflation data. There's plenty of reason to think further disinflation is in the pipeline. I hope the Fed's rhetoric shifts quickly. The risk is that it doesn't. Meanwhile, risks to the labor market are building. The direction is not good. California represented an outsized driver of claims this week. The trend was up even before that. He's talking about initial jobless claims. If you have a job, things are fine. If you're looking for one, things don't look so good. Last thing, Fed is a risk management enterprise. I think risk management and realized inflation progress support recalibrating policy. At the end of the day, unemployment is up and core inflation is down. The implication of that is clear. I've seen hawks make the argument that if the Fed cuts, they risk a repeat of watching inflation flare back up. I'm not so sure. You want to cut a little now as opposed to having to cut a lot later. Waiting longer for the sake of making up for Q1 is the policy equivalent of biting off your nose to spite your face. Okay, so Q1 was not great for the Fed. Stocks handled it well, but like all of the data was surprising to the upside, which pushed out the timeline, and that's why we went from 7 cuts to no cuts this year. Now we're back at 1 or 2. So his point is like, start now. You don't have to go crazy into an easing cycle, but let's not like have an emergency and then try to do all the cuts all at once. And I feel like that's reasonable, don't you?
Yes, the risks to me seem asymmetric. Unless they're worried at this point, like staying too restrictive and causing an unnecessary recession versus starting to normalize a little bit. Are they worried that if they ease up, risk assets are to go bonkers and
they already fucking have?
Risk assets.
Bitcoin is up 60% this year. Like if that's what you were trying to forestall, it didn't work. You got Micron is up 80% this year.
Right. Well, as you know, that has nothing to do with them.
I understand, but I'm just making the point. You're saying if risk assets are going to scream to the upside, didn't they? You know what I mean?
Dude,
like,
I think they should cut. I'm asking, what are they worried about?
the vibes.
All right, whatever.
Like all of a sudden, like banks are going to be like, oh, let's lend more. I don't see it. I don't get it. I really don't get it. Retail sales slump continues in May. Does this look like an overheating chart? Throw this up. This is the month-over-month change for U.S. retail sales. We got the number this morning. You could barely see the increase. Last month was an actual decrease from the prior month. I don't know. Does this look hot to you?
No.
Can I give you the numbers? Retail sales increased at a slower than expected pace in May as high interest rates and inflation continue to weigh on consumers. Retail sales increased 0.1%, less than the 0.3%. All right, it's 1 month. It's month over month. It's super noisy. Excluding autos and gas, retail sales increased 0.1%, which is pretty low relative to expectations. So not disastrous, but the consumer is calming down already.
Yeah.
It's like more confirmation that we've done the job. What else? You want that number to go negative 3 months in a row? What are you looking for?
Yeah.
So, anyway.
All right. Elon, he got it. He got what he wanted.
Thank God.
Yeah, seriously. He was down to his last 100-something billion.
I haven't slept.
All right, so the story on this is this compensation package, they passed this in 2018. A shareholder sued, and a judge in Delaware struck it down and said it was like unfair, or the shareholders didn't know. I can't remember exactly what she said, something like that. But anyway, the shareholders voted, and they supported the shit out of him. It was backed by 77% of votes. I didn't know this. I guess I should have, but retail investors own 30% of the stock. That sounds extraordinarily high. It is extraordinarily high for a company of this size. BlackRock and Vanguard supported him.
Yeah, they own 30% of the stock, but they are like the most vocal shareholder base in the world. I don't think there's any company that has a shareholder base, long and short, the stock.
Well, let's be honest. If you're, I mean, yeah, you're right. They are zealots, but Tesla is better off with Elon there than not there. He just is in terms of the share price.
I can't think of anyone who would, with a straight face, say otherwise. That wasn't the question. The question was when they signed this contract, did the board of directors really represent the shareholders?
Right.
Or were people really clear that if he made shareholders $500 billion, he would expect $50 billion in return based on the terms? And honestly, I feel like every person right now would sign onto that for every stock they own.
Dude, in 2018, when this package passed, Tesla was like 50 billion or so, give or take.
Yeah.
Maybe a little bit less. The stock ran to 1.3 trillion.
Do you know the Wall Street Journal had a reporter covering Tesla basically saying it was an insolvent company. The paper of record on Wall Street was saying the stock was a zero.
Well, to be fair,
when they signed that contract.
To be fair, he came close.
Right. No, but that's my point. That's my point.
Okay.
So that's into the depths of that moment is when he signed this deal.
Right.
And Alex Kantrowitz said, or Eric Jackson was on the show with us. He said he rewatched the clip on CNBC. They were in Davos. Nobody gave a shit. They were laughing.
Right.
Like, oh, all he has to do is quintuple the stock price.
Right.
And then he did.
Yeah, and then he did.
And then he did. So all of the stocks that you own right now, let's say you're going to vote, if one of these companies struck a deal with a chief executive that if the stock goes up 5x, roughly 10% of the monetary gain is going to go to the CEO, you'd probably say sure.
There's never been a company that's more synonymous with their leader than Tesla. Would you agree with that? This is a company of this size.
Yeah. The really interesting thing that happened, because I don't think most people thought that he was going to lose the shareholder vote. The really interesting thing that happened, though, is now the company is
Texas?
incorporated in Texas, and Texas has stood up these business courts that are now open for business, and you're going to see whether or not any company wants to follow Tesla. One of the negatives for shareholders in a company that goes to Texas from Delaware's got decades of precedent. And as a result, they can really protect shareholders because they've had all these things tried in their courts. That precedent is important. In Texas, it's like anything can happen, which sounds great if you're Elon, sounds less great if you're a shareholder, not just of Tesla, but of any company. But that's one really interesting development that came from it. These days, most stockholders don't really care about these things, and it's really more institutions that have something at stake, but I thought that was interesting.
Anyway, also in related news, last week, Morgan Stanley, I didn't read the report, but they put out a report asking if Tesla's going to make a phone. This is, okay, sure. Why not, I guess?
Yeah, they definitely will. They definitely will. I don't know how much it would cost them to make a phone, but I feel like they could afford to try. And, they've made a tequila, so like what? What? Tesla made a tequila, and it sold out.
I don't remember that.
So they sold flamethrowers on their website.
Yeah.
Okay.
That I remember.
They've done shit. So could they throw a Tesla phone out there and get a deal with AT&T to carry it? Yeah, they definitely could. I don't know that people will use it, but I think people will buy it as like, a collector's item. I don't know. It's feasible. Is Tesla going to make something that competes with the iPhone? To me, that feels like it would cost a lot of money and be a really big risk that the shareholders would not be excited about.
No, it's cool that I saw my iPhone the other day. I got a voicemail, and I was able to pop in. So I ignored the call, but I was able to pop in and see a transcription live of what of the voice message that the person was leaving. That's a new feature.
That's interesting. So
really cool.
As they're saying words,
yeah. So I'm like,
wait,
who is this?
What they're saying?
And I see, it's George. Okay, now I know who it is. I should call him back.
Huh.
Pretty cool.
That is kind of cool. I haven't seen that before.
Aoi.
I wrote about crypto and politics, and one of the really interesting things that I think is happening this summer. You good? Okay. One of the things I think that's interesting that's happening this summer is just like there doesn't seem to be anyone that is anti-crypto anymore. There seems like there's just no reason politically to fight this thing at this point.
Well, because it's like Will Ferrell streaking through the quad and up the gymnasium. He looks behind him. There's nobody there. There's no followers of the anti-crypto crusade anymore.
Yeah, and the pro-crypto crusade is beating the shit out of politicians with money.
Yeah.
They knocked Katie Porter out of the Senate race in the state of California. She is a hardcore progressive California Democrat, and they spent $10 million to humiliate her with attack ads. They didn't use the word crypto once in these ads. They just called her a bully and a liar and an actor and a fake and a fraud and effectively drummed her out of office. They're trying to do the same thing in the Bronx with some House of Representatives people. For some reason, the far left progressive wing of the Democratic Party is anti-crypto, which is weird because if you're into decentralization, I guess decentralization probably as a concept is bothersome. If you're very progressive, you kind of want everything centralized. So maybe that's but I thought like part of the promise of crypto is like we're anti-Wall Street and we're going to bank the unbanked. I guess that narrative is not powerful enough. So for whatever reason, the Republicans are pivoting to being pro-crypto before the Democrats have a chance to get there. It's a lot of money on the line. and $94 million went into super PACs and directly into political candidates' coffers since 2023. And now that this thing is like legalized on Wall Street, I can imagine that number doubling. Who's on the other side? Like nobody really. Even the banks want crypto to flourish.
There's
now
no anti-crypto vote. That's what you're saying.
It's not
right?
organized.
Right,
Yeah.
Right.
So like Elizabeth Warren is anti-crypto. She has no like her constituency is nothing
Dead.
compared to like you would think the incumbents, the banks, would be anti-crypto, but it's not that way. They're all making money now. They're either making markets in digital assets, or they're doing asset management strategies with digital assets, or they're underwriting companies that are involved with digital. Like it's too much money to be made playing ball. And I just think
how big do you think the voting block is of people that are like one issue voters when it comes to crypto? Is it 5 million people?
I'm making this up, but I literally would guess 5 million people.
It's a lot.
50 million people own crypto. Probably 20 million like don't care that much about it, and there's other things they care about more. And probably another 20 million don't own enough that they even realize they own it. Like they just bought something during 2020. And then 10% of the crypto ownership owns a lot, really gives a shit, will wait online to vote somebody out who's been hostile, and hates Democrats, frankly, because Gensler really made the administration, really was like the face of Biden's administration in terms of this stuff, and just was completely anti.
The margin of victory is not going to be that big either way, and this could really swing things.
It's going to swing. It's swinging House and Senate races, and not just swinging it because there's money, but people are mobilized, like the political will. So it's not just it's a lot of here. Jeff Yass from Susquehanna is a big donor, pro crypto. Fair Shake, which is a super PAC. There's 2 affiliated super PACs, Defend American Jobs and Protect Progress. They're raising money from Tyler and Cameron and Ben Horowitz and Mark Andreessen and Brian Armstrong, and Ripple is putting in money, and Coinbase. Like, there's a lot of passion and money on one side and no one on the other. So it's I think this is a really big reason to remain constructive on Bitcoin for the second half of this year. It's the point that I want to make.
Yeah.
It had a huge first half, seems to have taken a breather.
Yeah.
In the second half, you might have politicians from both parties demanding that there be more crypto, like at the rate this is going. And it's a really crazy about face from 2 years ago, when pretty much everyone wanted jail for people. So we've really come full circle in a pretty short period of time. I wanted to mention, for people who want to learn more about how advisors and professionals are utilizing Bitcoin in portfolios for clients, head over to our sister channel, The Unlock, and we put that up last night, and I thought it was a really great conversation with Rick Edelman. All right, you're up next.
Okay, fucking Wells Fargo. Did you see this story?
No.
Now,
tell me about it.
The story,
I did, but explain it.
So the story is really not material because Wells Fargo was up 1.5% yesterday and another 1.5% today. But it's just emblematic of why you want a great leader at the helm of your bank, not taking stupid risks. So here's the story. Wells Fargo got into business with a company called Bilt, B-I-L-T. It's a fintech startup. They issue a credit card. And the unlock that Bilt came to market with was that users can pay rent with it without incurring fees. And landlords don't want to take rent on a credit card because you pay 2 to 3%, and it's a big check. So no, give me a check or give me cash or whatever. I'm not bleeding.
They don't want to pay interchange fees on a $3,000 rent.
Bleeding 3%. So this was super popular. More than 1 million accounts were activated in the first 18 months.
It's a great idea.
It's a great idea, but it doesn't work. So Wells is losing as much as $10 million every month of the program. And the great thing is, dude, this contract goes through 2029.
Wait, why are they?
I'll tell you why. I'll tell you why.
$10 million a month.
All right, so here's from the Journal. There's a reason why credit cards hadn't gained traction in the rent sector until Bilt came along. Most landlords, okay, we already spoke about this. Bilt structured the card so landlords won't incur the fees. Wells instead eats it. About 6 months after the card was launched, Wells began paying Bilt a fee of about 80 basis points of each rent transaction, even though the bank isn't collecting interchange fees from landlords. Wells also is paying $200 each time a new card account is issued, which is normally reserved for like airlines and like super strong partnerships like that. So Wells had a gross miscalculation of what they thought would happen. They thought that they would get all these young people to open up accounts, and then they would cross-sell, and that they would use this as like their default card. But the problem is a lot of these people opened up an account just to put their rent on it, get the rewards. And
they didn't use the card for like Starbucks.
And they're using their Sapphire Reserve for their everyday expenses.
My God.
So this was just a spectacular failure, blew up in their face.
I mean, how much do they spend, though, on advertising?
Who?
Like $10 million? Is $10 million a month? Like
it's not material. It's a rounding error.
Yeah.
It's a rounding error. But of course, it's Wells Fargo is the bank that did this. And also, let's be honest, Goldman got into a lot of trouble going into the consumer business. Marcus was far from a home run. This shit's hard. But Wells has egg on their face again.
I like the idea. What could have made this work better? So all right. So Wells is going to eat the interchange fee, almost like a marketing cost.
Yeah, exactly.
And the assumption is that people will not only pay their rent with the Bilt card, they'll also do all their other spending on it, and that will wash out that interchange fee that Wells is eating.
I guess the calculus that they
hate the risk
that they made that was wrong is that people are, for whatever reason, married to their Reserve card, to their Amex, whatever it is. Maybe Wells wasn't, or Bilt wasn't being as competitive with other rewards. Who knows? But
you open this up by saying fucking Wells Fargo, but like, is anyone mad at them? They tried to do something good. It just didn't. The public didn't play along. But if the public had played along and used the card, this would have been a nice story.
I don't think
Wells Fargo invented a way for people to use a credit card to pay rent.
I don't think their communications people are super thrilled to have this negative press.
They should have sponsored this show. We could have explained this.
Anyway,
better.
what's hilarious is after the story, accounts are going crazy. People are opening up a ton of Bilt accounts because not everybody's heard of this. I hadn't heard of this. Oh
right.
shit, you could pay your rent with a credit card.
Are they going to shut it down? Or they should double down.
I don't know the details of. I don't know how can they. I don't know.
What do you mean? How can they double? They should double down. You get like a rapper. You gotta get like Lil Baby to come out and explain this shit on TikTok.
I don't know who that is.
In his language. No, I know you don't, but 100 million people do, and they are the users of a credit card that would pay their rent for them. So you got to get somebody to come out and explain like why this is cool and why you should get a Bilt card and use it for other things besides just your rent. Who does Wells Fargo have talking for them? Like Wilford Brimley? I'm trying to think of like, do they have like a spokesperson that anyone's familiar with? Because this seems like you want people in their late 20s, early 30s to understand how this works. You got to get people that they respect, like Quavo. I'm just saying, like I feel like this is not a total loss. They could salvage it. Or are they going to give up? What do you think?
I don't know, man, but Wilford Brimley was the most random, out of your ass name.
No, that's a guy that financial companies hire.
Oh, he was?
Diabetes and insurance shit and probably gold coins. I'm making that up, but it sounds like it's true. But you know, like Tom Selleck does the reverse mortgage stuff. That's fun. Nothing wrong with that. I'm saying this demographic requires Wells Fargo to like get somebody get Kai Cenat and explain to him, if you can, how this credit card is different from other credit cards.
Get who? Kai Cenat. Oh,
he's a live stream kid that has like 4 billion views. He just talks to his computer. I don't understand most of the words that he says. He says bro a lot, and sometimes he says breh.
So, you know, online people also ask, why is Kai Cenat so popular? Cultural impact. Cenat is credited with popularizing viral internet slang words such as Riz.
Okay, so then there you have it.
Boom.
So, let's get Kai Cenat to talk about the build card, bro. And just let's see. I would keep it in the market. All right, I'm gonna make the case. Did you know that storage is the new GPU?
What type of storage?
Like data storage.
Okay.
What do you think? What do you
Physical
think?
storage? I don't know.
Like a mudroom?
Yeah, storage.
I just made that up, and it's not true. But the middle innings of the AI build out are going to require an enormous amount of flash storage, not hard disk storage, which takes a long time for data to be recalled, but flash storage, which is immediately available for AI application. There are basically 3 publicly traded pure plays on the theme. And the one that I am most interested in, I just bought a tiny bit of the stock today. It's very high. The ticker is NTAP. We used to call this NTAP back in the day. I've made and lost money on this stock 1,000 times before you were even born. We were trading this in the late 90s or early 2000s as part of the original .com bubble. And now it's back. Let's throw a chart of NTAP on screen, John. This is since inception. Can I you can't see my mousing over this period from 1998 to
I gotcha.
You cannot even imagine what the stock used to do. This thing was like Michael Jordan. It would go up 5 points a day, and every day, like 5 days a week, 5 points a day. And back then, it was called Network Appliance. The company's roots are from 1992, but basically, in the early 2000s, they came up with network-attached storage, which I think was a prelude to the cloud, but basically having the data be separate from the computer or separate from the server. Do you follow me on that?
I have
having
no
the data held somewhere else.
No, I have no idea what you're saying. I gotta be honest.
Okay.
But
Anyway,
I like the chart. Chart looks good.
So you had Network Appliance, which has since rebranded as NetApp, which is what everybody actually calls it. You have VMware, which was acquired by Broadcom. And you had EMC, which is now owned by Dell. And there were probably 1 or 2 more, but these stocks were the storage stocks. Before there was such thing as cloud computing, you had data centers, and companies would house data physically inside racks of servers. And NetApp was one of the hottest stocks on the planet. Anyway,
And these
20 years.
these data rooms, those were in mud rooms.
They were in mudrooms. 20 years go by. These stocks are like nobody even knows that they still exist. Dell went private, came back public again. And now all of a sudden storage is on fire because there's a realization that if you spent all this money on GPUs, it's pointless if you can't move the data fast enough to make it worthwhile. Like, why did you buy all these GPUs to calculate and compute if the data is not moving efficiently and quickly? So storage is red hot. We've talked about Dell before. It's one of the best stocks of the year. This is in that group now. This stock's up 45% year to date. Do we have a more recent chart of this?
Yeah, I mean, the problem is this thing. Like, credit to you for buying it because most ordinary humans, most mortals will look at this chart and say, "Nah, I missed it."
Well, I didn't buy a lot, and I actually think I'm going to catch it in the low 120s. It's a momentum name, and let me show you another name, PSTG. John, we have a chart. So this is pure storage. This is much smaller and twice as expensive as NetApp, but is going up for the same reason. AI storage. The products that these companies are now selling, this next generation, have much higher margins and are going to sell much faster than previous generations of storage because AI demands it. And this data center build out requires better data storage. Let's put up Dell. Look at this shit.
Damn.
This is since it came back public, right? But this stock is parabolic this year. As you could see, it started the year at like 75. It hit 170 or something. It's at 150 now. And Dell does other things besides storage, so I shouldn't say it's a pure play. But again, they own EMC. Anyway, I don't think that people should follow me into this stock. I'm probably top ticking it short term. RSI is like 79 or something.
Yeah.
But I'm going to add to it if I get like a low volume pullback and the bull market remains intact. I think I'm going to end up buying more of it.
What you didn't show on the chart, I'll blame Sean because we need candlesticks, is this a double gap, which is very impressive. There was a gigantic gap higher last November, and then it spent the next couple of quarters going sideways, and then another gap sideways, and now accelerating again. That is super impressive.
What I also didn't show is that this is a 1.6% dividend.
That's not
And
relevant
a stock
at all.
selling 19 times forward earnings. So if you look at that chart, your assumption would be, holy shit, this has got to be 45 times earnings, and
Right.
it just is, and
Right.
it just is not. So look, it could be a short-term top. It's a crazy amount of momentum in here. On a retracement, though, I think I'm going to be adding to this thing.
All right, so
because I totally believe in that part.
if
of the
this
story.
gets down back to like 110, remind me to buy it, and
will.
maybe I will.
I will. Okay.
Okay. All right. Chart on, please. Oof. Okay. Is this?
Stock, index,
It's
commodity.
a stock. It's a stock.
Okay.
This might be the worst looking chart. I haven't really thought this through, but this might be the worst looking chart where the company is a oh my god, I'm about to embarrass myself. A verb.
The company is a verb.
Like the word, like
Yeah.
you know what I
I
mean?
understand.
Like I can't think of another company where it's a verb. The name
Is it DocuSign or Zoom?
it's Zoom.
Yeah. I was in this thing. I gave up on it.
So it had.
Six. What a piece of shit.
Oh, I took a very quick loss in here, not to brag, but it had been holding on and and it just gave way. It just collapsed recently, and
What a piece of shit.
what a piece of shit! Oh my god!
Well, so I shouldn't say that. We're customers, and
I'm talking about the stock.
We use
Holy
Zoom like
moly.
everyone else. The
Wait,
problem
hang
here,
on. I just realized this. It's at an all-time low.
Yeah,
That's an all-time low.
yeah. It's lower than before the pandemic.
It's low, way lower than the IPO price. Oh my good gourd!
So the obvious thing here is that Google Meet is as good or better.
Just ate its lunch.
Microsoft Teams is as good or
Not
better.
enough.
And they
Microsoft
don't-
Teams is a war crime.
to
but
Microsoft corporate. All right, so let me rephrase that. Users don't love the Microsoft Teams experience, but enterprise Microsoft customers would prefer that their employees use Teams rather than bring in Zoom. And that's it. It's that simple. It's just there are other options that consumers don't really give a shit. If somebody schedules a meeting with me and it's like a FaceTime or Zoom or Meet or Teams, I'm still going to the meeting. I might not love
Yeah.
Teams, but I'm going to go.
so at its peak during the pandemic, it was trading at 124 times sales. This is when it passed Exxon in market cap. It was 124 times sales. Today, you could have as much as you want for 3 times sales.
All right, let's go to the chat for some opinions on this because I'm seeing WebEx is worse. That's Cisco. They had this market to themselves. So did WebEx was the original corporate video meeting
Oh,
software.
WebEx is a shanda. If somebody sends you WebEx,
I know.
you just say, no, I can't make it.
But there was a time where that was the industry standard, and then Microsoft bought Skype, and Skype had a shot to totally own it. And for whatever reason,
Dropped the
Skype
ball.
just never got good. It just never got the genius of Zoom when it first came around. They figured out just make it so people could send each other a hyperlink.
They made
and
it
use
easy.
the web
It's a good
browser.
product.
They made it so easy.
It's a good product.
But then it wasn't enough. And it's a feature. That's the last thing. For these other companies, it's a feature.
Right.
For Zoom,
Right.
it's the whole Megillah. And that's not enough as a standalone business. So they got into enterprise telephony, and they're selling phone service and texting service and email, and they're trying, but it's really, really hard to grow. Those are very mature markets, and that's the story of why the stock is where it is. So, and I don't see it changing anytime soon.
Yeah, no, it's not good. All-time lows
So,
are
all
not
right.
bullish.
Nice mystery chart. I guessed it on the first. Did I right?
That's
first
called
go.
that's teamwork.
That's right. That's right. All right. Hey, everybody. Tomorrow is Wednesday, which means my favorite podcast, Animal Spirits with Michael and Ben, will arrive on the podcast app of your choice first thing in the morning. Don't forget, Thursday is an all-new Ask the Compound with Ben Carlson and Duncan Hill, followed by the Compound and Friends Friday, Jill on Money Saturday. We got you guys covered all week long. Thanks for keeping it with us. We appreciate it. We'll talk to you soon.